Our median sales price reached up to $365,000, and properties are spending on average 70 days on the market. Stick around and learn more. Let's start with the three numbers that paint the clearest picture of where we are right now. Our median sales price across Southwest Florida sits at $365,000, and this represents a 4.3% climb compared to September 2024. What this tells you as a buyer is that home values are holding strong through seasonal shifts, so waiting for a crash isn't a strategy that's working out. But the depreciation rate has moderated enough that you're not competing with panic buying that we saw 2 years ago. For sellers, this number confirms that you're sitting on genuine equity gains, and pricing at or slightly below this median with strong staging will pull in serious offers within that 70-day window. Speaking of 70 days, that's our median days on market, and it's up a remarkable 43% compared to last September. Homes are taking longer to sell, which fundamentally shifts the negotiating dynamic. Buyers now have time to conduct thorough inspections, compare multiple properties, and avoid waiving contingencies out of fear. Sellers need to understand that the first 2 weeks on market are still critical, but if you're not under contract by week 3, a small price adjustment or enhanced curb appeal can make all the difference rather than letting your listing go stale at 90 or 100 days. Finally, our active inventory stands at 24,765 homes, representing a 10% increase year over year, and our month supply of inventory has climbed to 9.5 months. This is the most balanced market we've seen since early 2021. For buyers, more inventory means more choice and less pressure to overbid. For sellers, it means your home needs to stand out through pricing, presentation, and marketing, because sitting on a market too long signals to buyers that something might be wrong, even when there isn't. Now let's move through the supporting metrics that round out the picture. New listings came in at 4,838 properties this September, down 2.1% from last year, but up 7.2% just from August. That surge in fresh inventory tells us that sellers across Fort Myers, Cape Coral, Lehigh Acres, and more are feeling confident enough to list, likely because they see stable prices and want to capture this fall selling season before the holidays slow everything down. If you're thinking about listing, you're in good company, but that also means your competition just increased. So professional photography and accurate pricing from day one are non-negotiable. Closed sales reached 2,606 transactions, up 2.8% year over year, but down 2.1% from August. That monthly dip is seasonal and expected as we transition out of summer, but the year-over-year growth shows that buyer demand hasn't evaporated despite higher inventory. Deals are still getting done, they're just taking more time and require more realistic expectations on both sides. Our median price per square foot sits at $235, down 6% from last September. This is the metric that catches people off guard because while the prices are up, the per square foot number has softened. What happened here is that buyers are gravitating towards slightly larger homes or properties with more land, which dilutes a per square foot figure even as total prices rise. For sellers, this means emphasizing livable square footage and functional layout in your marketing rather than just raw size. For buyers, it's a reminder to calculate your cost per square foot on any offer because two homes at $365,000 can have very different value propositions depending on size and condition. Let's talk about the number that's quietly reshaping buyer behavior right now, mortgage rates. As of late September, conventional 30-year fixed rates for primary residences are sitting at 6%, with loan amounts up to $802,650, and FHA loans are even better at 5.875%. Now let me put that into perspective with a concrete example. If you're financing $300,000 at 6% versus the 7% rates we saw earlier this year, your monthly principal and interest payment drops from about $1,996 down to $1,799. That's about $197 a month back into your pocket, or roughly $2,367 a year. And over 30 years, that's about $71,012 in total savings just from 1% difference. For buyers, this rate environment means your purchasing power has improved significantly. And if you've been renting while waiting for the rates to drop into the fours, you need to understand that this may not happen for years. And in the meantime, you're building zero equity. For sellers, these improved rates are loosening the lock-in effect we've been talking about for months. Homeowners who are hesitant to sell and give up their 3% mortgage are realizing that if they're moving up or downsizing for lifestyle reasons, a 6% rate on their next home is manageable, especially when they're capturing sustainable equity from their current property. That psychological shift is part of the reason why we're seeing new listings climb, and it's creating opportunities on both sides of the transaction. Let me take you into Estero for this month's neighborhood spotlight because the numbers here are telling a completely different story than the broader market. While the region overall is seeing modest growth, Estero's market posted a median sales price of $550,000 in September, up nearly 13% from August. The market closed 93 sales, up 1%, and active inventory actually dropped 1% to 672 homes, while the rest of Southwest Florida is seeing inventory climb. What's driving this? Estero sits in that sweet spot between Fort Myers and Naples, with newer construction, top-rated schools, and resort-style communities that attract both retirees and young families. If you're looking in Estero, understand you're competing in a micro-market where demand is outpacing supply, so your offer needs to be sharp. If you're selling there, you have pricing power, but don't overshoot, because even hot neighborhoods will punish overpricing with extended days on market. Comment your zip code below, and I'll put you in a custom comparable analysis so you know where your neighborhood stands right now. Let me walk you through 3 emerging patterns I'm seeing on the ground and exactly what you should do about each one. First, we're entering the fall shoulder season where inventory traditionally stays levitated, but buyer activity slows as families settle into school routines and the holidays approach. What this means for buyers is that sellers who have been on the market since July or August are getting nervous about carrying their property into the slower summer months, and that creates negotiating leverage. Your action item: look for listings that have been active for 60 to 90 days and submit offers 10 to 15,000 below asking with a request for a home warranty or inspection related repairs. You'll be surprised how many sellers will accept that to lock in a deal before Thanksgiving. Second, I'm seeing a surge in cash buyers returning to the market now that equity markets have stabilized. If you're financing your purchase, your action item is to get fully pre-approved, not just pre-qualified, and include a strong earnest money deposit with your offer to signal you're serious. For sellers, this means if you received a cash offer, even if it's $5,000 to $10,000 below your best finance offer, strongly consider it because the closing timeline is half as long and there's zero financing contingency risk. Third, price per square foot compression is creating value opportunities in older neighborhoods with solid bones. Buyers are realizing that a 1980s home in an established K-Core neighborhood at $210 per square foot can be a better long-term investment than a 2020 new build at $260 per square foot if you're willing to update flooring and kitchens over time. Your action item as a buyer: expand your search to include homes built between 1980 and 2000, budget $15,000 to $25,000 for cosmetic updates, and you'll capture instant equity. Sellers in these older homes should stage with modern neutral finishes and emphasize lot size and location because that's where your value proposition lives. Let's bring it home with 3 key takeaways you need to remember. Southwest Florida's median home price is holding at $365,000 with 70 days on the market, giving buyers negotiating power and sellers pricing stability. Mortgage rates in the low sixes are opening doors for buyers who have been sitting on the sidelines, and they're unlocking inventory as more sellers decide to make their move. And neighborhood-specific trends like what we're seeing in Estero proves that one-size-fits-all market analysis doesn't work, so you need hyper-local data to make smart decisions. Drop your zip code in the comments, and I'll send you a free comparable market analysis for your exact area. And make sure you subscribe and hit the playlist for every monthly Southwest Florida update. See you next month, where I'll bring the numbers and you bring the questions.